This is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you on this post-Super Bowl morning. I have some things to discuss, and then there is some Bitcoin news, or Tesla news. We'll call it Tesla and Bitcoin news about a few minutes ago, maybe 15 minutes ago now. So that's going to be our lead story of the morning. Bitcoin is moving. Tesla is moving. We'll talk about that. We'll talk about, there are some other headlines, but again, that's really going to be like the main story. The theme in the morning, I want to hit on Peloton. I want to hit on OCGN. We'll take questions from our chat, and our guest today is Tim Quast. He is the founder and CEO of ModernIR and Market Structure Edge. Today's show is also sponsored by Market Structure Edge. It is the first decision support platform for traders built on market structure. To learn more, go to marketstructureedge.com. There is the URL. Joel, why don't you pull up your charts here? Show us what we're doing in the overnight session in the S&P 500 futures.
I can do that for you. Good morning, Spencer. Good morning, traders, investors. Well, we had a strong close on Friday, right? And that strong close has translated into a strong open. Let me share my screen to give you the S&P 500 index futures here. Trading up, boom, boom. Let's see. It's giving me a little bit of a hard time. Here we go. We're trading up 12 3/4 handles at 38.93. We stopped at 3,950 for no other reason than it's never been there before. Nice round number. Pre-market low, that was made early in the session at 85.50. So no downside till we take that out. Crude, that's on its merry way. Great week last week. That's up 61 cents at 57.46. Crude getting back up to those February levels. It's taken a while for crude to get there, but it's working its way up towards $60. Gold, that's up 11.90 after a bad week last week at 11.24.90. Silver back above 27, my favorite metal, at up 22 cents at 27.24. And you knew it was a matter of time before Bitcoin cleared 40,000. Mr. Musk and Tesla helped out today, up 14%, $5,440.
Yeah.
Triple D. What's going on? How was your weekend?
It was interesting. I'll say that much. I had a very interesting weekend. Had a septic backup at my parents' house that I was trying to help out with, and and then I had an interesting weekend on Reddit too, I guess. So maybe we should address the Reddit stuff, because if people haven't been listening or reading the chat here this morning. So I had a Reuters reporter call me. I'll give you the backstory with this article. Had a Reuters reporter call me. They call, like, usually I'm in there once a week. So you get the Reuters reporters, and he wanted to talk Reddit, and he wanted to talk Wall Street bets. I initially said, I don't even know if I want to talk Wall Street bets, because I don't want everybody, coming after me type deal. But, what I did say was, I thought that, the Wall Street bets, I said, look, I changed my entire strategies. I've been trading, and shorting stocks for 20 years. And Wall Street bets was powerful enough that they made me change some of my core strategies. For a week and a half to 2 weeks, I backed off shorting mid caps and shorting small caps. That's how powerful Wall Street bets is. Like, that's how the back conversation is. But then, I got into the conversation. I said, I think the effects are starting to diminish, because you've obviously seen some stocks come down, and you've seen, some people lose some money. So, so I've started shorting stocks again. Well, that got quoted in Reuters, that end part of that conversation, and Wall Street Bets grabbed a hold of it. And I've been like, there are like 3,000 messages about me, like, not nice messages. So I have all the respect. Wall Street Bets people, if you're in there, I have so much respect for you guys. I changed my core strategies. Yeah. That part wasn't in the article. Like, I literally changed core strategies. Stop shorting stocks, like, temporarily. I just said I'm starting to short stocks again. And they didn't like that. Evil short seller. So, Wall Street Bets, I have the most respect for you guys. Even though a lot of you call me some not so nice names, it's okay. It's okay. So I want to be friends. We want to be friends with Wall Street Bets. And you know what? I do have respect for you guys. And no, I'm not telling you what I'm shorting. They all want to know what I'm shorting. So all the respect for Wall Street Bets.
Well, I'll tell them what you're shorting. You're shorting some SPY. You're shorting Apple.
That's
there.
It's mega caps.
Shorting
the Qs. Yeah, I'll tell
Ford.
SPY and Qs. That could be a tough short squeeze on them. Maybe
I
not. Maybe they can squeeze those too.
If they can do that, man, I mean, someone's actually squeezing this higher, right? Institutions or whatever. I think the interview.
I'm not saying I was misquoted. I was just saying the whole story wasn't there. And yes, I was on RT too, and I said the same thing. I talked about the effects. People are calling me out for that interview too. I talked about the effects diminishing. I think the Wall Street Bets effects have diminished to a certain extent. We've seen some of these stocks come back down. So I'll stand by that quote. But I mean, still at the same time, I have the most respect. And if they start to gang up on stocks, I'll be watching out. But I am shorting some stocks still. I'm not going to come out and publicly, just like, we had, Citron saying he's not coming out and saying what he's publicly shorting now either, because it's a dangerous game, because they can squeeze them. They're a powerful group.
I mean, the funny thing too is we talk about shorts and put short setups on the show, but I mean, our long-term portfolios are long, fully invested,
sure.
in the market.
Yeah.
I don't think that interview on Russia TV helped you out any either. I mean, that guy was trying to make out, as like just a crazy trader and stuff, and you had to rein him in.
Okay, though. It was almost confusing the first question I had if you watched that interview, because he threw out, "Oh, here's one of the GameStop traders," and I was like, "Well, I wasn't trading GameStop." So that was a little bit. That's why I was like a little bumbled up off the bat, because I didn't know how to answer that question, because I wasn't trading GameStop. I was saying I was intentionally staying away from it. I was like, but I could have got run over in that. I mean, I short stocks. I'm not an evil short seller, and the one thing that people don't consider, they think all shorts is evil. If you get rid of shorts, your S&Ps, everything, your ETF arbitrage, do you want your SPY to represent the S&P 500? Ask yourself that question. If you buy SPY, do you want it to track the S&P 500? Because if you eliminate short selling altogether, the shorts are what keeps that price in line. The stocks get a little bit too high, they short the stocks against the SPY. Stocks get a little bit too low, they buy the stocks against the SPY. And they keep it all in line, so it's always moving. You have that arbitrage. So this short impacts keeps the market more efficient, especially on the mega caps and big caps. So just eliminating, talking to the regulators as well, you put curbs on short selling, you all of a sudden introduce new inefficiencies that, prop traders are probably going to take advantage of again. So playing with the market structure, is not, ideal here. I don't think there was problems with the market structure. And you know what? They found a hole, and when people are short 140% of the float, there's the potential for a stock squeeze. So it was a learning, experience for a lot of hedge funds.
I think for a lot of other people too. But we're up this morning just to go over the GME action. It got the double Kramer pump.
It did.
On Friday. Wow.
Is he going to be on this week? Is that what, Spencer? Do we have confirmation that GME is going to be on Mad Money this week?
Well, that's what he said.
But he didn't give a date. So no. He said he's got 2 episodes coming up at GME, and that's really the catalyst for this wicked rally that we saw just off the open.
It doesn't even look
Kramer
that wicked.
tweeted that out, and it halted on volatility on the upside that GME was going to be on Mad Money. Because we know Mad Money moves stocks, and this is a stock that moves more than any of them. So, I don't want to be short GME right now ahead of a Mad Money episode. So if you're coming in here and shorting GME at 68 and thinking, well, this is, going to go back to 20 or 10, you're asking for a little bit of trouble, because ahead of Mad Money segments, you often see a pop ahead of those. And I don't know if there's a date even on it yet. So I'd be cautious being short GME. It's almost feel like there could be a little long trade short term. But again, it's such a wild stock. I don't come in there, because 68, the thing could fall to 50 on you. Then you get a pop to 55 on Kramer, and you're still down 13 points. So hard to trade it just because it's so wickedly volatile.
And I just said tongue in cheek on Friday about, hey, if you get a pop in this thing, you're going to find sellers. And I just threw out like the previous day's high of 91.50, not thinking in any way whatsoever that it would get there. Well, it got to 95 on that. So I think we could just look at it, forget the story, forget everything else, and we'll just look at this technically. And technically says you got a couple lows in the same area, 53.33 and 51.09, split deal $50. And then on the upside, you got two highs in the same area, 91.50 and 95. So could we trade in between this for, a long time and consolidate before next word? We very well could. But you got some nice parameters set up there. But basically, between 50 and 95, this thing can go anywhere it wants at any time.
So let's jump to the big story of the morning, and that is not the Super Bowl stocks. It is Tesla, and Tesla taking a position in Bitcoin. And this has popped the stock substantially. It is not just popping the stock. It has blasted Bitcoin off into orbit. Yes, I'm still long Bitcoin via the QBTC in Canada. Have it in my retirement account. I said 0 or what did I say my target was? I don't even remember now.
100,000.
100,000. Well, maybe I got to up that target after the Elon position here. So it's 40. Okay. Where is Bitcoin this morning?
I just got the futures at 43,380.
I think we're going to see 100,000 by the end of the year. I think we're going to see 50,000 by the end of the week. This is going to, I think it's already catapulting it. I wouldn't chase it, but you get a little pullback here. You now have Musk, and every time he's going to continue to tweet about it in all likelihood. So we know he likes to talk, his positions there. So apparently anyways, even before we know them, because he was talking about Bitcoin for the last month, and now we find out he took a position in it. It's actually very smart of Tesla because, one, Tesla's a story stock, and now you combine it with the story of Bitcoin, and Tesla's not going to only be seen as, the EV play, the battery play, the solar play. Now it's going to be seen as a crypto play too. So you combine all those stories, and you think, wow, this stock doesn't trade on fundamentals. It trades on story, and you just add a whole new story to it. I mean, really, 1.5 billion worth of Bitcoin to Tesla is next to nothing. You're talking about an $850 billion market cap company. 1.5 billion is nothing, but it's the story behind it. So even putting it in perspective, I think there's like 970 million shares outstanding here. So you're talking about slap it on, or how many shares? Let's grab how many shares are outstanding on Tesla before I just.
He's not the first one to do this, and I just pulled it. And I was talking all last week about the consolidation, and they did sneak it over 40 on Saturday, and then they brought it back down, and now this news has us well over. But what's the company? MicroStrategy? I mean, they did this a long time ago. This is with that MSTR.
Yeah, but that's a bigger portion. So MSTR is like a crypto play, because it's holding Bitcoins. A majority of MicroStrategy's money is in Bitcoin.
Correct.
Such a small portion of Tesla's money. So I'm just saying, it makes sense because he adds a story to it, but it really doesn't change anything on the bottom line or the top line. It just adds the story element. So when Bitcoin's ripping, you're going to see Tesla, some investors thinking that that's a play now, because $807 billion company at the close, 947 million shares outstanding. So we just tacked on $20 billion worth of market cap here to Tesla. It just added $20 billion worth of market cap this morning because he bought $1.5 billion worth of Bitcoin. The math doesn't add up, but that's a genius move for Musk. If he's going to get that kind of move, I'd buy more Bitcoin again, and you watch it pop up again.
Well, it's not just the Bitcoin purchase. It's that they also said that they expect to begin accepting Bitcoin as a form of payment in the near future.
Who's paying with Bitcoin? Who is actually doing this? Do we have anybody in the chat that actively pays stuff with Bitcoin? I know people are using it. I'm holding it as a store of value right now for the simple reason is that, but I still say it's speculative, but I think the speculation, I think the story, I said at the beginning of the year, I think the story carries Bitcoin in 2021. I think Bitcoin is a story of 2021. And that's why I bought Bitcoin back in November of 2020. Now it's combined with Tesla, but who actually is transacting in Bitcoin? Is anyone?
Yeah, I'm sure people are.
I heard it's not that efficient though to even transact in it. Like it's not like easy. I mean, okay, I'm going to pay you a Bitcoin. I'm going to go buy a sandwich.
Well,
with a Bitcoin.
isn't that
what if they screw up a decimal point? Because it can be like 0.00028 Bitcoins. What if they screwed up a decimal point or something when they're typing it in? I mean, the number of it being that high just makes it difficult to transact in.
Well, isn't that partly what PayPal and Square are trying to solve and make it easier to use to transact in Bitcoin?
Okay.
So, I mean, people do it.
I'm not going to say there's a bearish case. I was bearish Bitcoin for a long time, and I've been bullish, since like I got bullish back when back in March when I thought everything, and then Bitcoin ended up going down there, which didn't make that much sense to me. And obviously it's come back significantly since then, but we've been on the Bitcoin bullish train here for a while. I'm just sticking with it. I don't care if you transact and I don't care. I just care that there's a story here. Story is what matters to investors in this market right now until proven guilty, until we get some epic crash. Story is all that matters. Tesla now adds the crypto story to its portfolio. It makes me not want to be short Tesla. It makes me not want to be short Bitcoin.
Actually, November too is when we had Mark Yusko on. That's when
he talked me into it.
Yeah,
too.
yeah.
He's like, why not? Why get off zero? Is what he said. I was like, okay. I didn't go and load up and put, like Jeremy Newsom's putting like huge amounts of his money into Bitcoin. That's a big bet. I mean, I don't know. Like I'm not confident enough to go put 30 or 40 or 50% of my net worth. Can I throw 1 or 2% into it? Sure, because I can afford to lose 1 or 2%. But if you're buying Bitcoin, you still have to say, we don't know how this story ends. So it's speculative. It's still speculative at this point in time. But I think it goes higher. I think you're going to see 100,000 by the end of the year. I don't know if it's going to 500,000 or $1 million. I don't know how you value it. It's just as long as the story is carrying it. That's what's got. But the story now does not cool off with Elon Musk supporting it and him tweeting about it every day. Even the Dogecoin, or whatever the hell they call it. I mean, Musk is tweeting about that continuously.
Yeah, I don't know.
And it's been jacked here too. I mean, we went from fractions of a cent up to what, 6-7 cents now. Where is it?
I haven't even kept an eye on it.
I don't even know how you bring it up.
But referring, you made that statement about Jeremy. He buys like on a daily basis. I don't know what percentage of his portfolio is. It's actually a good strategy if you're bullish in something long term. Just kind of like your S&P index. You put a little money to work each week, and you're not worried about. If it goes up a little or down a little bit, you're just kind of dollar cost averaging and building a stake. Now, he does have a core position lower, but the futures just hit 44,785.
Hard to be bearish.
Yep.
I don't. Why? Why do you want to be?
I don't want to be bearish anything.
Why do you want? It's a great point.
That's a good
Why
point.
do you want to be bearish anything? I'm going to tell you on the long side, everything is working. I mean, I don't know when it stops all working, but everything is working. I mean, I had Super Bowl stocks, that a list of them. We talked about them, before. They all worked.
Well, let's do some stocks. What were the Super Bowl?
Let's go to the Super Bowl stocks. I mean, General Motors, we talked about this as a Super Bowl play. We knew they were going to have a commercial. The commercial was really strong. I mean, talking about 30 EVs before 2025. Will Ferrell on the commercial. I mean, they brought it. I'm long GM. I think GM, I said on Twitter, I think GM could be $100 stock. I'm going to say it. I think you got to buy pullbacks on GM because this is not only a pure EV play, it's going to be a pure EV play eventually because I'm telling you, in 10 years, we're all going to be EV. And so, yeah, it's got gas guzzling, it's got oil in there now, but they're converting over 30 vehicles. Maybe they're not going to get that many, but there's going to be a lot of choice here. So this is a value EV play. And I think Ford is too. I like General Motors better. I own them both, Ford and General Motors. I think this puts them back on the map. I think they're going to be major players in EV.
Guess who helped creating and evaluating the Edward Scissorhand commercial for Cadillac?
No idea.
Dana.
Oh, really?
Yep.
Oh, that's awesome. Congrats.
Yep.
Daughter. Very nice.
Yeah. She was like,
wow.
She was like,
big, Joel.
She was actually nervous almost all day talking about it,
Nice.
And like that. It was trending on Twitter and I like the whole thing. But yeah, she was really, really excited about it. Folks wanted to pull up the GM chart. You got the GM chart right here in front of you. You just hit a tad over $56 in the pre-market trading, but that's not the high. 55.77, where we're at. Well, we're just above that right now. Oh, we're up by quite a bit. The recent high, what is that high? All-time high. Well, all-time high since it got out of the government. Right there, 56.97, folks. So there you go. There's your bogey for today. I know Warren holds a big piece of this one. And all-time closing high, that was the day after at 55.40. So that's what you're looking at in GM.
Do you got this one, Joel? Do you have GM or?
Yes,
Ford?
I do. Yep.
You have both?
I got both. Yeah, you got to support the Motor City.
The D.
I jumped in late. You guys got a much better pricing for.
I jumped in GM late. I didn't get GM until that dip. That was when we were getting the GME. Everything was selling off, and I was like, "Well, I wanted GM." It went to 57. It pulled back down under 50, and I picked it up then.
You know why it went down under 50?
Because of GME. It did everything. That was the sell-off.
Well,
the
also,
market. They were hitting every stock.
Motley Fool beat up on it.
I'm saying it was all GME.
You got to read.
Everything was getting sold off because they were worried that hedge funds had to sell everything because of the short squeeze and it was going to, impact stocks. I was worried about it too. GME sold off and all the stocks came back. So, anyways, General Motors, I think it was a steal under $50. I think I'll say it again. This could be. I'm not saying it is, but I'm saying this could be $100 stock. I can see the path to 100 for General Motors.
We were Spencer and I were talking on the late show that if you like a stock's at like 75, it's going to 100.
That's what it does.
If it's like if it's 780, it's going to 1,000. Except for Amazon, it's much higher. It's going to 5,000. Yeah,
I don't even know if Amazon's ever going to move. Shout out to Bruce again there. I mean, he picked up that entire straddle that he wrote. I'm thinking I should just start writing the straddle too on this thing every week if it's going to give you that kind of premium. I don't know where it is. I can go price it out right now in the background while you guys talk another stock. But Super Bowl stocks, so the two you naturally think about, Penn Gaming, DKNG, they ran up substantially into the Super Bowl. They're still up this morning. I'd be careful chasing these ones, though, because they had a big move into it. And sometimes you do see a reversal on those moves. Like I like General Motors. I'd buy a pullback on these. These have moved a lot. You're coming in Penn and DKNG now. You're chasing. I'd say wait for a dip. Great companies, both of them. But I'd wait for a dip.
Yeah, obviously, I don't know how they did on this. I know there's a lot of bads. I mean, the favorite, I don't know. I mean, it'd be interesting, but you know what? They make money on the juice anyways. So both stocks, I could just tell you, DKNG here, just running into a little trouble here. Just over 64.80. You have 3 15-minute brackets there, 64.90, and then what did you have on Friday? Just keep the high on that right there, 64.51. Trying to do a little bit better, but maybe you got a little seller at 65. And in Penn, I know that had a big day. From the pre-market trading, it just hit 134. Someone's got a little excited on that 4 a.m. print. You backed off $4. So that's your bogey there. Top of yesterday's range or Friday's range is 129.
This Amazon straddle for this week, it doesn't even have an earnings report in there. So it was jacked up to $170 last week because of earnings. Just a normal week for it. We're looking at 44. I'm just looking at 33.50 at the closes, obviously, because we don't have, and they're a little bit wide, so you got to take the middle of it. Looks about $84. So if you were able to just keep, you have to write the call and the put. And obviously, you're not going to always keep it all. You're going to get assigned, but then my buddy Bruce says, you get assigned, you get the stock, then you start writing upside calls against it. You just keep sitting there, you just keep writing against it. As long as the stock doesn't crash or blast off into orbit. I mean, if you're nervous about, stocks as you don't want to be bearish stocks, then you could just rate the puts. And you get $43 for the 33.50. So it goes down to 32.50, you get a sign, then he says, and I rate the upside calls. And he says eventually, if it just keeps staying in the same range, you eventually get called away and you're making more premium that way too. So I mean, it's been a strategy that works very well in a sideways market. I don't mind that strategy at all. Not if you pick the right stock. $80. $80. Annualize that. If you were able to pick up $80 a week in annual on a 3,300, like 80 times 50, Like, what the hell is that? It's 4,000. That's the whole thing. I mean, if you're able to pick up 80 a week, right? So $4,000.
Yep.
Stock's gone nowhere in the last 6 months, but if you're rating those straddles, you've made like probably $1,200, $1,300, $1,400 a share. Not a bad strategy. Again, when you're rating the straddles, both sides. So if it rips higher on you, then that's painful too. If it rips lower on you, it crashes, that's painful as well. But goes sideways, straddle rater is just winning.
Yeah, Brian mentioned no split. No talk of a split on that.
I don't think they will. You think like they never have. Has Amazon ever? When's the last time Amazon split?
Let's look it up right now.
It's been a long time. I think they have before, obviously, but I don't know.
Everyone split in the .com bubble.
Yeah, they were split back then.
Let's see.
Splitting was cool.
3 splits. The last one was in 1999. They did.
Wow.
They did 3 splits within the span of 1 year.
Yeah, because every time you split back, then the stocks would pop 20%. So they were being rewarded for splits. So all management except Warren Buffett was splitting stocks. Buffett said never. It costs money. It doesn't fundamentally make any sense for me. But everybody else is like, oh yeah, but this makes our stock pop up 20%. We're going to do a split. I thought once we saw the Apple and Tesla splits, I thought we'd start seeing some more.
I did too.
But we really didn't, see very many. So I thought we'd see some cool splits. But everybody likes the high stock price now. So. All right, so we talked Amazon straddles. We've talked a little bit about the Super Bowl.
Hey, they're bringing up this tweet from Elon from December. This conversation where someone tweeted at Elon that he said, "You should do your shareholders a favor and convert the Tesla balance sheet from U.S. dollars into Bitcoin."
I remember that tweet.
And he responded, "Are such large transactions even possible?" So that's not a no.
Yeah, I mean, he's combined the story. I think it's a genius move. If you're looking, he's probably looking at his stock and saying, well, there's no way it makes any sense on valuation, but you add this element to it. How do you propel it forward from here? You got to keep doing new things. I mean, this was an easy one. This was low hanging fruit. Yeah. I'll buy a little Bitcoin and get a hold of the crypto story as well. And then you can tweet a little bit about Bitcoin, tweet a little bit about Dogecoin. And away you go. I mean, this is
Doge.
I'm just gonna call it Dogecoin forever.
Right, whatever.
It's a dog. It's not Doge. That's
whatever.
I learned what that animal is called when I was a little, when I was like 2 years old. It's called a dog.
Well, I mean, it sort of makes sense because the whole thing was, as far as I know, it was created as a joke.
Yeah, so it's a joke. It is a joke. I mean, but whatever. It's making some people money right now.
Yeah,
I tell you, if it was a stock right now and I could come in there, I'd probably buy it because the story probably carries it higher. Yeah. Did we ever figure out where it is?
Yeah. Oh, yeah. It's like 7.
That's incredible.
7.
Where was it like a month ago? Before
7.3 cents, I think.
Where was it a month ago? Wasn't it under a penny?
I didn't go that. I didn't look at that.
Wait, hey, this thing's been an incredible mover.
Like 7.3 cents this morning.
Wow.
And there's 7.5 cents this morning. Where was it a month ago?
Yeah.
It was like
I know nothing about Dogecoin.
It was 1 cent. It was less than one. It was 1 cent.
Pretty good 1 month return.
Yeah.
Elon Musk basically doubled it from 4 cents to almost 8 cents here now. So you get Musk tweeting about something. He moves stocks. He moves crypto. He moves price.
What other Super Bowl stock commercials?
There was a few. There was quite a few actually. So I had them written down on this. Look at this paper though. It's all,
I noted the fourth quarter Robinhood commercial. Did you guys see the Robinhood commercial in the fourth quarter?
No. I saw it. I didn't see it live. I saw it after though.
You're an investor. I'm an investor. We're all investors. That was the takeaway. That was my takeaway.
Interesting. Yeah, Rocket was on there. They want to talk RKT.
I mean, you got someone step up a plate at $21 here. I mean, it just can't. I mean, it just 21, 21, 21, 21, 21. It's had a few spikes, but building a base there, someone building a position. So excellent level to lean on. Spikes have been hard to hold trading up today. They don't hold.
It was even up this morning, like in the pre-market. The 4 a.m. traders getting all excited because they were sponsored the halftime show. Well, at least they were all over the halftime show. I saw
target for today. If you're looking for a daily target, 2240 was your high from yesterday, and that's about it. I see a high. I mean, they got this high when someone was on CNBC, I believe, and they said no short of stock. So I think that's when you got that fluff. But nice base at 21 to see. Only number I got for you, folks, for today is 2240 on the upside.
I don't know. I'm out of Rocket. I sold it into the short squeeze. When it got the benefit, obviously going from 20 up there, I got over $25. I didn't get that high, but I got out. I could get talked back into it, but I mean, there's so many other stocks that have been moving. It's like I looked at my long-term portfolio, and like I said before, it was like 93 out of 100 stocks I got, and they were up, and it was one of them that was down, and then I got the short squeeze and popped up. I mean, there's so many stocks that are moving so much better than Rocket. Does it eventually have a catch-up trade here? Is it a good company? I think it is. I think it's got a story. I think it's a good company. I think it could eventually go. But there's just so much stuff that's going all the time. Why try to time this one that really hasn't gone anywhere besides a short squeeze last week? So I don't know if this is the catalyst to blast it off either. So because they were on the halftime. So I just think there's better places for your money. That's all.
All right, S&Ps, we're just hanging comfortably here in the 38.90 handle. 38.95 is our last print, so not far. 10 points off the low, 5 points off the high. Just kind of quiet, just hanging in there. Nice game.
They want to talk Cathie.
Cathie, let's talk Cathie.
She made some moves. The biggest one she probably made, notable one, was Snapchat, actually. It's not popping here, but we know that Snap was wow. It was down. I was like, I hope it gets down to 50 so I could buy it. It didn't even sniff. It just turned around on a dime and then went straight up. So they were all over the dip just initially even. They even let it dip down below 55 in the regular session. And then, it continued to go higher. And now it makes new highs on the move again. So there's, an earnings report that was initially seen as disappointing in one day, getting it all back and then tacking it on. So, and Cathie bought the dip as well. And I doubt she was buying. You can tell what she does. She goes to good companies like you. You was another one that she bought on Friday because it had a significant dip. So she goes into the stocks that have significant dips, the storied stocks, the tech stocks that have significant dips, and she buys the dip. She listens to PreMarket Prep. She buys the dip.
She
does. She buys the dip.
Unity found support at 128.54. It's where it closed, and they had a low closed right near the low too. Let's see what else we got. That 28.64 where it's closed. Cathie was leaning on these two lows right here, going back to late November, 126 and 128. So that's a pretty good level, trading up a little bit today. And then what's the other one that you mentioned that she
I'll give you them all. So this is what she bought on Friday. She bought PayPal. She bought Thermo Fisher. I have a position in that, full disclosure. LVGVW. I don't know much about Longview, but she bought that one. That one's going to pop because that's a SPAC. And
what? LVG? Wait, what is that?
I have that she bought LGVW on my list. I'm pretty sure. I can go verify it, but I wrote it down.
All right,
I wrote it down Friday. I'm pretty sure.
Up 2 sticks.
I'll look at the email.
Yeah, no, she did. I have it too. I just
so that's going to go up substantially when you're buying a SPAC. That's a big mover. She bought Vertex VRTX. She bought Regeneron, which she's been buying for a while here. REGN. She bought Unity. We already talked about that. She's been buying Novartis every day. NVS. She seems to buy that every single day. She bought Snapchat. KTOS, which she's bought before. It's up substantially, but I mean, I don't know why they keep popping every time she's bought this thing like a dozen times. Teradyne, she's been buying every single day. And Peloton, she bought, it dipped on Friday, so she bought some Peloton. And she bought more Nvidia. So there's your stocks. LGVW is probably the one that's going to move the most, smaller cap, and obviously a SPAC. So that's where she's going to have the most push. So it's up 10% on Cathie.
All right. So here's my hot take. Whenever the day comes where ARK Invest and Cathie Wood it goes from hot to not, we're going to reverse it. We're not going to look at her buys. We're only going to look at her sells because stocks are going to go up when she sells them.
She doesn't.
I never even
They
look
sell.
at her sales
Who
because it's
sells?
the same thing as an
Who
SEC filing.
sells? Yeah.
That's my
You
hot
know
take.
what? They are selling, but they don't care. The market
cares?
doesn't care.
All right.
I look at those SEC filings all the time. You know what insiders are buying, and there'd be like an insider sell for like $1 bazillion, and the market doesn't even care. It doesn't even look at it. Doesn't even impact the price. So it's the same thing. It's this market's so rigged to the upside. They only look at what she buys.
We said that a long time ago.
Joel said it like 10 years ago. This market's rigged to the upside. It is rigged by the Fed. So I mean, why be bearish?
It's a great question.
How many people following Cathie Wood are really interested in what she's selling? Chat. Is there anybody that's like, oh, she sold this? I don't even know what she sold. I don't even look. Let's go look at the email just for fun. Let's go see what she sold. We're gonna bring on. We'll keep.
Because she sells something, she's buying something else.
I'm going in there just to see quickly. We're going to get to a guest in a second because Market Structure Monday. We're not going to miss that. Tim, we're getting to you in a second. Stay in the background. Sell LSPD, which is Lightspeed. She sold Roku. She sold Splunk. She sold Pure Storage, PSTG. She sold Organovo Holdings, ONVO. She sold Pinterest. Is she a day trader? She just bought it.
I was going to say she bought that last week.
She started to trade this stuff, man. Why not? She buy it, go up 5%, and then she sells, and then it'll go back down, and then she rebuy it. So maybe that makes sense for her to do.
She rebuys.
Kind of influence.
Yep.
AVAV she sold. HUIA she sold, and she sold Agora. It had the huge pop. Congrats, Jason Raznick, on that call. Had the
What's the symbol on that one?
That was
API. Stock's just a monster. Blasting off. She did ring the register on some of that. But
all right.
She's buying selling a little bit.
It is Mondays, which means it's time for Market Structure Mondays. Let's bring on our guest here, Tim Quast, CEO of Market Structure Edge. Tim, good morning.
Guys, good to see you.
Oh,
I missed you.
We missed you too. So you took the week off there. We missed you. We had Joe Sluthi, who's pretty good though too.
You had the A team instead of the B team.
No, come on.
I listened to it and it was outstanding. As I said in my note to you, Spencer, it was the best market structure stuff you would have gotten anywhere last week, and it was here on the pre-market prep.
Yeah, we had Bill Hurts on too. Did you catch the Bill Hurts interview?
No, I didn't. I know Bill.
Oh yeah, we all know Bill. He's on the other side sometimes.
Yes, he is. He is. Yep.
But he knows the stuff. So Tim, talk to us. Obviously we're seeing lots of different things here happening in the markets. Did you watch the Super Bowl too?
I watched part of it. I just got the reason I look like I'm from Miami is I just got off this boat. I was in the Caribbean.
Oh my goodness, you were living the dream.
And that's why, so I look a little haggard. That's probably due to both age and rum. And
he was social distancing. He was social distancing.
So I came back to 4,000 emails. So I can only watch part of the game. And did it go as you expected? I mean,
yes.
Coming off the sea, I'm clearly rooting for the Buccaneers. That's
Brady.
right. People on the boats.
My boy Brady.
Yeah.
Michigan.
Yeah. The Brady puts have officially expired worthless. I tweeted that last night, but the Brady puts are now officially worthless.
That's it.
He's still going. He's talking about playing to 45. Yeah.
Well, if you play that well, why stop?
Yeah.
He's arguably got to be the most dominant player to his sport in the history of sports. In the history of sports.
Right.
Yeah.
I mean, that's unbelievable what he's accomplished, and then he goes from the Pats to the Bucks, and the Bucks win the Super Bowl. I mean, the story behind this guy is unreal.
Right.
Unreal.
You can't say it's the coaching staff or the supportive cast. It's clearly Brady is central to those outcomes. No question.
Unreal.
Yeah. Just like market structure, all he does is go up. Right.
All right, let's talk market structure. Did you fix everything when? Yeah, someone mentioned Michael Phelps too. That's very good. He actually spent some time at Michigan too. But so when you were out there sailing, did you figure out what to do with the market here to fix the market structure, or is everything fine?
Well, we leave and the market goes berserk. Wood pulp futures behaved like tulip bulbs in the 17th century Holland. And, GameStop goes crazy, silver goes berserk, all kinds of things happen. And to me, it gets to something that Joe Saluzzi often talks about, that there's the market has this appearance of a lot of liquidity, but there's a very thin veneer, like an oiled pan of real liquidity in the marketplace. So if there's any form of distortion in the supply-demand balance, the thing that we always talk about at Market Structure Edge is the market is supply and demand. And if stocks spend more time overloved than underloved, they go up. And a lot of the market has done that. And so we saw a lot of those distortions in liquidity. And in that same vein, something to keep in mind, traders, when you look at folks like you were talking a lot about Cathie Wood's positions. Well, remember, she has an inherent insurmountable competitive advantage over you traders. She's not flipping stocks. She is trading stocks in the wholesale market for baskets of ARC ETF shares and trading them back. And she doesn't have to pay taxes on it. She doesn't have to pay commissions. And the whole transaction occurs off market. So sure, every time something goes up, you wash it out in the redemption basket and you bring something in the creation basket. And it's something that very few people understand about the way that ETFs work. So if you wonder why you cannot duplicate her results, it's because you're not an ETF. You're a day trader. That's the reality of the marketplace. Is that fair? Well, it is what it is. There are a lot of things about the market that aren't fair, including the way that GME behaves because of intermediaries like Citadel Securities. We talked about that last week. And I want that one thing that I think traders need to understand about what happened, not just with GameStop, but why Robinhood and others halted access to trading in some of these securities. And it's this notion of clearing and settlement. And I think if we spend 1 minute on it, you should know this. Everybody in the market should understand this because it's part of the behavior in context of rules of the money behind price and volume. So when a Robinhood, for a clearinghouse like the National Securities Clearing Corp, a unit of the Depository Trust and Clearing Corp, it looks at Robinhood, they don't see 20 million traders, they see a portfolio. And if that portfolio includes a bunch of stocks that have suddenly become very volatile, then what the NSCC is going to say is, Robinhood, pony up, because we have T+2 to settle these trades. And if anything goes wrong in those 2 days during settlement, we're not on the hook for that. You are. So instead of 300 million in capital, you need to put up 3 billion. Well, Robinhood doesn't have 3 billion. So they have to go raise it to supply it as a deposit so they can resume trading. And it's very important to understand that those dislocations occur because of huge swings in volatility in the marketplace. And now so I think that's just important for folks to understand.
Well, because everybody thought it was a conspiracy, and this wasn't really just a conspiracy here. You're saying the same thing. We were trying to talk about this on the show last week as well, is that they had to do this. I mean, you can't risk, the alternative is something does go wrong in those T+2. Robinhood goes down, everybody loses, now we got a major brokerage account, going down because of, one security. And so not allowing them to trade for 4 or 5 days, it absolutely was maybe their only choice. They just didn't communicate it well. Maybe that was the issue. They should have communicated it a little bit better.
They sure should have. And the funny thing is, in their blog posts, they're ironically very clear market structure writers. They write in very simple terms, but they don't do a good job of communicating, it appears, to their customers and to the public in a more open forum. So it's fascinating. And you can, so here's if we like, I'm going to share my screen.
For sure.
Because I want to show you something here that I think will be not my face. We don't want my face again, like we happened last time. But by the way, really quickly, there's the back of my balding head off of Jolly Harbor in Antigua, and that's what it looks like on a big boat. That's one of our friends from Texas. And here I am hanging out in the dolphin chair outside of Hermitage Bay. So if you know this, the reason we go is the Antiguans need us. You know,
living the dream. I am so jealous of you. If I showed you outside my house right now, I have 3.5 feet of snow.
Oh my goodness, that's that's crazy. Well, going over here to Edge. So here's what. And by the way, if you want to follow along, just sign up for a free trial. I don't need a credit card, and I'm telling you, you can look at it this way, feel no obligation. And I realize, Spencer, we don't want to spend much time looking at this, but I want to point this out. So here, back to GameStop.
Yeah.
Here's the illustration of what happened. And remember that one of the basic principles to me of market structure is that the market is supply and demand, and we think of it as a 10-point scale. Things above 5 tend to rise. Things below 5 tend to fall. And see how much time. This is market structure sentiment. Price is very volatile. Sentiment is not. So as long as sentiment remains above 5, stocks tend to do better. When they begin to mean revert, notice that is happening here, and short volumes begin to rise. Here's the short squeeze right in here. That's what happened. Very brief. It was just the immense pressure that was created that caused that. Well, it's going away. Doesn't mean it can't come back. But I will hazard here that the big runs in GME are over because of that. Market structure is beginning to revert. And Citadel, which buys all the limit orders, is going to know. They're going to look and say, well, here's the buy demand, here's the sell demand. They're getting really close. Now, Citadel will want to shift short. And that's how the market works.
So what is this? What are your thoughts just overall? Like, let's just stay with the GME for a little bit, because we've got, this, group of, 8 million traders strong here, Wall Street Bets here now. Right. Obviously, they have a huge influence on individual stocks, especially when they're smaller or mid-cap stocks. Right. What are your thoughts here just on, how, this impacts one, traders who are trying to trade these stocks, and then just two, from a market structure perspective, what are your thoughts here of this group of traders coming in, pushing stocks around?
Well, I tip my hat to them.
I do too.
I'm delighted to see retail money flex its muscle. It's the great, it's one of the great characteristics of Americans. And in some ways, I wish we'd see it in other places in our society where the common folks would flex their muscle. And that's what this is. And you can talk about, are there manias? Well, of course there are. Manias are always a product of excess money and limited supplies of product. That's what happened in the tulip mania of 1636. The Dutch merchants had collected all this money from the New World, and it chased a bunch of tulips. It's a classic mania. Is there a mania here? Well, yeah. If the government's pumping a bunch of money out and people have nothing but time on their hands to sit and play video games and trade in their Robinhood accounts, we're going to have these things. But do I think that the fault rests with Wall Street Bets? Of course not. I don't. There is a fault to market structure. Yeah, the fact that there is to me, it's the intermediation of the markets. As we've talked about before, over 50% of volume in the marketplace comes from folks like Citadel Securities and Two Sigma and Hudson River Tradings and Virtu, Wolverine. And I'm not knocking these folks. It's not their fault. They're taking advantage of the existing rule structure. But they don't care about the proper price for something. They care whether demand exceeds supply in this fraction of a second. And if all these retail brokerages are encouraging people to use limit orders, you're a fool if you use a marketable trade. Use limit orders, limit orders, limit orders, limit orders, limit orders. Well, you're creating an information advantage for Citadel if that's the case. Citadel buys those orders and they know the supply and demand. And so this causes extreme short-term distortions in the market. Now, here's the question. It's the great, it's the sword of Damocles. That market structure plus the T plus 35 advantage that market makers have in shorting, Citadel can manufacture shares to solve imbalances. Well, the good news out of that is that there is always something to buy and sell. The bad news is none of us know what real supply and demand are and whether the prices are correct. Because in truth, if there was not a Citadel and GameStop moved like that, it would go from $5 to $5,000. And there wouldn't be anything to buy or sell. Well, we would immediately recognize a bizarre condition in the market. So is that worse, or is it better? Is it worse to have Citadel? You tell me, Dennis.
Well, I've given the same argument. Obviously, I like a diverse pool of liquidity, which you don't have now. But what we have is what we have. We have high frequency trading liquidity. Yep. And so we have created this, like you said, this has been created. The high frequency traders obviously have taken advantage of the structure that we have. I mean, if you look to where liquidity was back in the 90s, at floor traders, you had, the institutional, you had so many different types of traders. That's the diversity of the pool of liquidity. But now high frequency traders are so efficient at what they do. That's why we look at the floor of the exchanges and you don't see much happening there at all anymore, because there's no way a human being can compete. I mean, we get picked off in a split second. I used to, do a lot of market making as well. And Joel was a market maker on the floor as well as a local. And you know what? We've adjusted our trading strategies and just extend our time frame a little bit because we can't compete in that field. So now you have high frequency liquidity. But if you all of a sudden decide, okay, we don't want high frequency trading liquidity anymore, let's just tax it or something and get rid of it. Well, now you have no liquidity at all because all these other pools aren't coming back. So, I mean, what do? I mean, if you're a regulator, you're like, well, we can't just get rid of these guys because these are our only market makers now. I mean, how many market makers are on the floor of the NYSE now? 7 or 8 from hundreds?
It's crazy. No, you're dead on, spot on, correct. And it raises this thing that I hear from public companies all the time. When I say, well, a whole bunch of your volume will not show up in your settlement data. And they say, well, that's not possible because for every buyer, there has to be a seller. And I say, no, that's only true at the close. So somebody could borrow 100 shares from BNY Mellon and trade it 1 million times, and it's 100 million shares of volume. It's still only 100 shares. And whoever the last two parties are, who will have a clearinghouse in between them, who will be counterparty to both sides of that trade, that's 100 shares that'll settle. And you could have, that's what people can't wrap their minds around. Well, that's the market we have. And it creates incredible efficiencies on one hand and unbelievable distortions in people's capacity to understand real supply and demand in the market at the same time.
Yeah, like Bill Hartz was on last week talking about the rehypothecation of shares. And, and this was a main reason for why, we have these short interests of 130, 140%. It's because those same shares are being borrowed. And then you sell those short into the market to the buyer, who then, all of a sudden can lend those shares out again. Well, it's the same shares going again, lending, and just being reused. And so it's not naked shorting. They're all legal shares. They're legal shorts. But at the same time, it's those same shares that are being lent. That's how it gets above the float.
I thought you did a great job with Joe last week explaining that what real naked shorting is. And I've long contended there's some folks who run around semi-nefarious telling public companies that, you have massive naked shorting and we can help you solve that problem. And I explained to them, no, there's very, very little naked shorting. You can go look at the threshold stocks. Almost all of them are ETFs, in fact, not stocks. There is very little naked shorting because, as you explained, people get punished for that. But what does exist is this market making exemption to create shares. And they're given that capacity because the market is so dependent on automated trading, high frequency trading. And there's no way a high frequency trader who's trading 1,000 different securities, long and short, in 400 milliseconds is going to be able to know whether those shares exist to borrow. So the SEC gives them leeway to create money in effect. And that's what happens in the marketplace. And so if you think there's a bunch of naked shorting, you're wrong. Right?
Tim Quast, CEO of Market Structure Edge. So what do you think? Is there going to be any regulatory changes coming down the pipeline? I mean, Dennis mentions the financial transaction tax. I mean, it is what it is. I mean, the GME was halted a few times and stuff. We saw one thing that Dennis and I and also Spencer talked about when the market, meltdown in March is, man, it held up pretty good. I mean, considering the S&Ps, the spiders, everything, and we looked at it, and we could analyze it and everything. So if it ain't broke. Don't fix it. What's your thought?
Well, Joel, you know how long it takes the SEC to get anything done anyway. So unless there's a giant smoking hole in the ground that yet lies ahead, I will be highly surprised if much changes. Now, there is a big update to Reg NMS called Reg NMS 2. I call it Reg Nemesis 2. That's coming. So we'll see. You know, that'll have to. I'm sure it'll matriculate through the courts and various forms of litigation. There will be some rule changes, but I would be surprised if any of it relates to GameStop ultimately. What do you think?
I mean, besides the halts and the circuit breakers and stuff, if people want to purchase shares and it goes through the marketplace, hey, I mean,
it's not the first time we saw a bubble on an individual security.
Free markets for free men. I mean, you know, the only thing, Dennis gets me nervous when he starts talking about the financial transaction tax. That's the only thing. But I think there's a lot of things going on in Washington right now where, you know, that's just not, you know, that's just kind of on the back burner for now. But I think that would be something that I'd like to see avoid. That could have a negative impact on the markets.
It could. Well, and I realize we're about out of time, but I'm not sure that Joe mentioned this, but, you know, there is a financial transaction tax in effect already. It's called the Section 31 fees. That's how the SEC funds itself. Interestingly, this explosion of volume, and there are other factors too that come into play, that actually got cut by an historical amount here recently from go ahead.
$22 a mil to I think $5 and change. I mean, that was saving me. I was like figuring out that I was like, that's going to save me like $100 a day. I was like, that's pretty cool. I trade quite a bit. That's right on my bottom line.
Right. There you go. And it will feed more. It will feed more trading. There's no question. The trouble is, what happens if that dries up? That will be the other shoe dropping. If volume dries up, and the SEC then has to boost that fee dramatically at some point in the future, it'll be a double whammy.
Up to $22, we've had that for, you know, it's been up there for years. So it was a nice, you know, that's nice. I was like, I don't usually get my fees cut. So I was like, I was kind of happy to read that. But at the same time, like this financial transaction tax, to just put it in perspective. So we're talking $5 a mil. They were proposing 0.1%. So that's all of a sudden you're talking $1,000 on a mil. I mean, you're talking something that's 200 times the size. So what that does is it implodes all the structure. I mean, your high frequency traders all of a sudden aren't profitable until they're making 0.1 and 0. If they do both sides, it'd be 0.2. So all of a sudden your spreads go from being here to here because they're going to pass that on in the form of wider spreads. They're not going to give you this tight little 1 cent market on the SPY if they're getting taxed. So it just kind of implodes everything. And that's why, you know, we get Andrew Ross Sorkin talking financial transaction tax to curb speculation. That doesn't curb speculation. It destroys liquidity.
Yep.
Exactly. Yep. He doesn't understand it.
All right. Tim Quast is the founder and CEO of Market Structure Edge. Joins us every Monday from Market Structure Mondays. Tim, we appreciate the time.
Good to see you guys.
Good to have you back.
We got you. Did you try and make up for last week, Tim? You were there. Holy mackerel. Charge this guy more money.
Have a good one,
Tim. It's 8:35 to 8:59. Oh, man. What are we doing here? It's charity. We run a charity.
We definitely got on some tangents, but that's okay. It was a good conversation. Let's do a couple more things before we wrap up. I want to hit on Zillow. I don't know if you guys saw the SNL Zillow skit, whatever, over the weekend, but I've never felt more personally attacked in my entire life. I feel like they were speaking directly to me. I highly recommend you watch it. It was just, you know, SNL does those like those fake commercials, and they did a fake commercial about Zillow that was hilarious.
Why were you felt attacked?
Because the entire commercial, it was like, you know, it was a commercial for like one of those like late night hotlines, but instead of it being a hotline, it was Zillow. And, you know, the entire premise is like, you know, when you're lying in bed at night, you like go on your phone and you browse Zillow. And that's exactly what I do. So anyway, I thought of that just now. I remembered that just now, and wanted to mention that. If you haven't checked it out, check it. It was very funny. I don't know how the stock's at all-time high, right? Pretty sure.
Yeah, I mean,
Yeah.
you look at the stocks and you try to think, okay, well, where are we going to find, where are we going to find something, where it hasn't run yet? I mean, everything has run. So yeah, I say don't chase stocks. So you got to wait a little bit of pullback here. But right now, like I look at what I've got in my long-term portfolio, and I'm chasing some stuff here too. I mean, even my GM purchase was chasing to a certain extent. I mean, I waited for a dip, but 40 to 57, then I bought at 50. I wasn't the guy that bought it at 40. So, I am chasing it to a certain extent. So it's hard. I mean, it just keeps thinking, okay, well, this one's going to go next. And I mean, if you do buy the ones that are in the gutter, like the Coca-Colas or the Procter & Gamble's right now, or even the Clorox, which is unbelievable because I got short squeezed and then, it's come all the way down and now making new lows. Maybe these turn eventually, but with a raging bull market, people don't want consumer staples.
Nope.
So they're laying off the consumer staples. If the market goes into the gutter, the consumer staples are a little bit of a hedge because those are the kind of stocks that people will then flock to and say, oh, I like making 3-4% of my money as opposed to losing 3-4% a day. But as long as the raging bull's intact, consumer staples are out of favor.
Yeah, those stocks have been Procter and Gamble. I mean,
in the gutter.
Get the return. Did Coke have I didn't catch all the commercials last night. Did Coke have a commercial?
They usually do.
If they did, I forgot about it already.
What was the best commercial? What do you rank? General Motors, Will Ferrell?
I honestly don't remember. Like I remember the one for like oat milk. That was the one, and I remember. I don't know. I scoff at them, right? I scoff at the Uber Eats. Oh my gosh, that was so sanctimonious and fake. But yeah, support local business, says the firm that takes a cut out of every order from local business. But I don't know. I don't have a favorite. Sorry.
All right. Anyways, we are seeing a little bit of leakage in Penn Gaming. It's come down a little bit. Like I said, those stocks ran. If you're coming in and buying Penn now, you're buying somebody else's profits because this ran significantly up into the Super Bowl. You get the pre-market. It's like, oh yeah, Penn Gaming had to benefit. This feels like a little bit. It could be the sell on news event. So I still like Penn Gaming. I don't have it. I shouldn't have sold it. I sold it when I was nervous and it was in consolidation station, and it had obviously breached my price target, but pulls back and I probably reload. DraftKings, same thing. It's just run up into the report. So you got to be careful just chasing, after the event. I like buying the stocks before the event and then selling them like kind of on the news. Like if I had these, I'd be selling them this morning or selling them, prior to going into the event, because sometimes, you get the actual event, you get a little lift and then they pull the rug out from under it. So just be cautious that way. Even on General Motors, a great commercial. Lots of people talking about this morning. It gets a little bit of a pop. I'd like to actually buy more shares, but again, I like buying dips, not rips.
All right, Mitch, who is listening but is not here because he's in the middle of moving, I think. He wants us to hit on. He reminded me the home builders look good. He's pounding the table on the home builders right now. So
that's just the environment has been,
all of them. Keep it home.
They're value stocks. They are obviously in an environment that's been very good to them. They're all firing on all cylinders here. For the most part, I've missed this trade because they've, well, maybe not, because they've been in consolidation station for a while. But you look at these and is this as good as it gets? That's where, Lennar is making new highs, which is nice. But again, these aren't, high growth tech stocks. So they're doing well. They're doing very well in this environment. Are these storied stocks that are going to continue to carry? I struggle to find the sexy story with the home builders, which is why I'm probably not getting in them. Joel, what are your thoughts on the home builders? These great companies. They're value stocks.
Yeah, they just man, oh man, I don't have any. I believe I don't have any home builders in my portfolio. They are a precursor for the economy, and with COVID, the value of homes. It's really, if you look at it, it's it helps your Home Depots, it helps your furniture stores, it helps your John Deere's because people got to buy tractors. It's really at the core of the economy. I don't know. I don't know where I would step in on these things. If you want to you feel like you missed a party, the one thing you can do is, just go out over a long time, say, hey, I'm going to devote $2,000, let's say, to this and do it over a period of time and hope you get some pullbacks on it. That's my thought. XHB, I looked at that. It's not quite at the all-time high, so you got some room there. But just one heck of, just like all the other charts, just grinding higher since March.
Everything works. If you're long stocks, for the most part, it works in a bull market. We're all sitting with portfolios where we're up in all the stocks and we all feel like we're geniuses. And, that might be the case. Obviously, everybody's been smart to be long stocks. So I don't know. Like I said, it's hard.
It's stonks, isn't it?
Stonks. Yeah, it's stonks. Portnoy renamed it. It's stonks. We're all along the stonks.
He didn't do that. That wasn't him.
Portnoy.
No.
I heard it from Portnoy first.
It started as a joke. It started as an accident. And
I thought it was Portnoy.
I know. Most jokes originated from anonymous people on Reddit.
And then Portnoy ran with it.
And then people run with it. But yeah. All right. 9:06. Guys, any final thoughts before I wrap it up here? Or was that maybe?
I think that's it. We're just saying.
Yeah.
I don't see why the bull thesis is derailed all of a sudden. I think this is great news for Bitcoin. I know the Tesla's getting the pop on, that they bought some Bitcoin. I think that this just gives another vote of confidence to Bitcoin. It's making new highs. You get a little pullback. I think it's a buying opportunity. I think Bitcoin's going to 100,000.
Okay. I don't know.
Okay.
I'll just say, the S&Ps here, we've only had a 15-point range overnight. And I'm looking, and it's been coming down a little bit, but we've been moving 50, 60 handles a day. And so right now, it doesn't look like we're giving any look to the downside. I noticed there's been some small sell-offs off the open. We did have that on Friday, snuck in the top of Thursday's range and took off. But there's certainly we're not going to stay here at 38.95.50 in a few point range, and bulls definitely favor the move on the upside.
All right. I want to remind everyone today's show was sponsored by Market Structure Edge. It is the first decision support platform for traders built on market structure. Try the new way to trade for free. MarketStructureEdge.com. I want to thank our guest, Tim Quast. Hit that like button, hit subscribe, hit share wherever you're watching this. That's going to be a wrap for PreMarket Prep. But if you've been watching for the last week, you've noticed that we've been staying on all day, open 8 a.m. to the close and sometimes later. So I'm going to say goodbye to Joel and Dennis here, and I'm going to bring on